Hello everyone, hello Barack, the very first over here in our chat box. Welcome once again. Glad to see you once again. Today, first of all, it's Tuesday. Welcome everyone. And just a very tiny thing just to have in mind is that this week is the very last of March. Not only March, of the whole quarter as well. So be careful, guys, because we might face some profit-taking conditions because of it's the last week of March, the last week of the first quarter. We have already seen small profit-taking conditions, but this might get it may actually increase by Friday, the very last week of the quarter. Just a tiny note to have in mind for the rest of the week. So today we're gonna go through scalping, and more precisely management rules, regarding scalping. Okay, scalping strategies and in general rules that a scalper should have in mind. Before I start, as usual, I need to go through the disclaimer warning. Okay. Remember, anything you need, we're here to help. So webinars@agefm.com is our email address. And of course, via all social media of AGFM, in Instagram, Facebook, Messenger, LinkedIn, Twitter, and etc. This week, we're gonna host a live analysis as usual for PCE, personal consumption expenditure. This time, my colleague Michalis will present the particular analysis, live analysis. So that will be on Friday. So let me go through the the disclaimer warning just until everyone slowly joins. So this material is provided as general marketing communication for information purposes only and does not constitute an independent investment research. Nothing in this communication contains or should be considered as containing investment advice or an investment recommendation or a solicitation for the purpose of buying or selling of any financial instruments. All information provided is gathered from reputable sources, and any information containing an indication of past performance is not a guarantee or reliable indicator of future performance. Users acknowledge that any investment in leveraged products is characterized by a certain degree of uncertainty, and that any investment of this nature involves a high level of risk, for which the users are solely responsible and liable. We assume no liability for any loss arising from any investment made based on the information provided in this communication. This communication must not be reproduced or further distributed without our prior written permission. Risk warning: trade in leveraged products such as Forex and derivatives may not be suitable for all investors as they carry a high degree of risk to your capital. Please ensure that you fully understand the risk involved, take into account your investment objectives and level of experience before trading. And if necessary, seek independent advice. Please read the full risk disclosure. So we are good to go. Let me just quick. So what we're going to cover today, as I mentioned, is all about scalping. So obviously, we're going to go through the basics, first of all, about scalping, what it is, how it works, and etc. The risks involved scalping, and how to manage sorry. Obviously, feel free to ask anything you want. I'm here to help. This is my mission here. So let me know, just stick on the question box any question that you might have, and I will try to reply as soon as possible, obviously within the live session. So Let's start with the basics. What is scalping? So, okay, just out of curiosity, if anyone is a scalper over here, just let me know in the question box. So, what is scalping? Scalping is a strategy, okay, a trading strategy, which is basically designed in a way, in order to profit from small price changes. So profits on these trades taken very quickly and once a trade has become profitable. So all forms of trading, right? All forms of trading, regardless the strategy, all forms of trading require discipline. But in this case, in scalping, because the number of trades is so large and the gains from each individual trade is so small, is as soon as it became profitable, as I said earlier, any trader that is following scalping, which strategy, so who is actually a scalper, must have a pretty rigid adherence to its trading system, avoiding one large loss that could wipe out dozens of successful trades. Is this clear? So scalping, guys, let me just simplify a bit. So scalping involves small profits, okay? Profits on small price changes, okay? Very quickly. And so as soon as the trade becomes profitable, so it's multiple small profits. But exactly for that reason, okay, in a case of a losing trade, the scalper should avoid leaving a losing trade getting larger and larger, because this will offset, will wipe out its successful trades, because they are small successful trades. So that's why scalping requires, as I said, a rigid adherence to the particular trading system. I'm going to explain what I mean later on as well, but so because sorry, but usually, actually not usually, that's the case, scalpers, okay, scalpers, what they pretty much do, they take small, as I said, many small profits and not run any winners in order to seize gains as and when they appear. So this is the aim. The aim is for a successful trading strategy through the large number of winners rather than a few successful traders with large winning sizes. This is the aim of scalping, okay? It's okay if you don't like it. If it might not be for you, but it is for some people. There are people that prefer small wins, okay, rather than few but large ones. So this is the concept. This is the idea behind. Why is this is the idea behind it? Simply because the idea of scalping relies on lower exposure risk, okay, because there is an actual time in the market on each trade, which is quite small, lessening with this way the risk of an adverse event causing a big move. This is the concept behind scalping. Also, it takes the view that smaller moves are easier to get than larger ones, more handleable, more more easy to handle. So yeah, this is the view. It takes a view that smaller moves are easier to get than large ones, and that smaller moves are more frequent than large ones. So, oh, sorry. How I managed to jump. We're still, sorry for that. We're still here. Yeah, what else? Small profit. I mentioned the fact that for that exact reason it needs some it needs rigid adherence to their to this particular trading system, and this goes over here. So it requires, it's a strategy, has a entry levels, exit levels. So it needs scalping because it's a fast system, requires strict exit strategies in order, as I said, to prevent large losses, which will wipe out the so far gains. That's why they need an increasing, a huge discipline from the trader. And that's why, guys, we can see traders that are are very, very, very highly disciplined and experienced on price action be actually scalpers. Someone new, someone non-experienced one, someone that is not so familiar with price action, who still doesn't he's not able to control the emotions, his emotions in trading, shouldn't consider trying scalping. Okay, I realized that my mentality, so Rodero is saying, Mario Rodero, I realized that my mentality drives me to scalping. However, I make the mistake of letting the losing entries go bigger. Okay, so this is exactly the point that I'm just I just mentioned, dear Mario. If it leads you to scalping, it means that from profit-taking conditions you are good, but you are losing, as you said, you're letting your by saying that you're letting your losing entries grow bigger, it shows me two things. Either out of anxiety, stress, you let it because you are thinking that they might reverse and it might at least let you break even, okay? Or the second thing is that your exit strategy is not the appropriate one. So what I will say, you should work more on finding an appropriate exit strategy and don't change it. As soon as you find something, as soon as you find a system, an exit system that at least lets you break even, okay, on those particular trades I'm referring to, okay, keep it and follow it, stick to it. If you have a good exit strategy, but you tend to amend it because you're thinking that, oh, it will revert and I will manage to close with lower losses and etc., then it's not your exit strategy that is the wrong one, it's your mentality. So I don't know which of the two scenarios is the one that lets you leaving your losing entries to get higher, but work on it. Okay, find out which of the two whether you have a weak exit strategy, so you need to check it again and again and make it so you don't have an exit strategy. No, dear, no, I understand emotions. for me, it's the number, the most difficult part, the number one barrier, obstacle in trading, okay? But otherwise, if you don't work on it, you will end up not only losing, but wasting all these efforts, because this shows me that you are doing good. I mean, you have some profits, but you're wiping them out because of your refusal to exit. Okay, so since you admit that you refuse to exit, place, I mean, set, obviously the exit level should be predetermined. If you predetermine them, then you will stick with them. I mean, you won't let your emotions let you. If you predetermine it, if you before entering the market, if you have predetermined your exit level and you have placed it in your MT4 or MT5, then will close automatically. And with this way, you will not touch the mouse. So yeah, you should work on it. It's quite sad having profits and with a single trade losing everything just because of not greatness. This is not greatness. It looks to me more of a fear. It's human. I mean, we're humans. Yeah, I can totally understand you. The majority over here, we have all went through that. So let's move on. We covered what is scalping. We mentioned that the objective is more frequent entries, few pips, very quick, small time frames. The higher time frame for a scalper is 5 minutes. So in the standard, we are referring to seconds, a minute, 30 seconds, a minute, 2 seconds, 2 minutes, 3 minutes, depends if you're in MT5, you can find all these, this type of time frames as well, but the maximum is 5 minutes. And as I mentioned earlier in the beginning of this, actually in the very previous slide, the positive, the advantage, let's say, of scalping is lower exposure risk. Okay, if of course you follow, you have, as Rodero said, an exit strategy. It's not only about spotting quickly and getting multiple short time trades, small trades. It's about exit, having an exit strategy in place, an exit system in place, an automated one, to be more precise. So yeah, scalping strategies generally use real-time technical analysis to make small and frequent profits by, as I said, skimming a few pips from each trade, executed in seconds to a minute. And the ideal time frame for scalpers are typically 1 minute, a few seconds, 1 minute, and 5 minutes the maximum. Okay. Not the theory, but history, or the so far, I mean, the history of financial markets and online trading, etc. We have seen that the scalping trading strategy is best used when we have currencies, in the forex more precisely. It works the best in currencies, though that doesn't necessarily mean that you cannot use it elsewhere. It is also very famous in futures, stocks, cryptos, commodities. Okay, commodities in gold, to be more precise. The rest are quite slow, so scalping is not ideal, but yes, it's best used when investing in currencies. It can be done manually or automated, okay? So manual requires you as trader to monitor the charts constantly, where automated methods utilize usually an expert advisor, or if you are a programmer or something, if you like programming, you can create your own coding and etc. So, but if you are in countries that the internet connection is not reliable, that would be a huge obstacle for scalping, guys. Okay, because I know that some countries have don't really have a high-speed internet connection, so consider that as well, depending on where in the world you are. Okay. Yeah. So as I said, the historical data, go backwards, have shown that scalpers often use the derivatives to trade forex pairs that are falling or rising in value. So then let's move on. Actually, we can move on. Already covered. Okay, we have replied to the questions. Actually, this is pretty much covered already with the Mario's confession. Sorry. So before trying, sorry, quite tired today. Before trying in a live account, scalping, obviously, I'm a huge fan of demo accounts. You should believe that everything that you want to try, you should try it there for an adequate time period as well. But especially for scalping, guys, if you're still struggling to control your emotions, then don't try it, to be honest. Be patient, try something else, try something that keeps you calm, keeps you calm, basically, and not anxious, not fearing of that something will go wrong, and etc. Because obviously working on ourselves needs time. Okay, so if you have the wrong mindset, scalping could be a double sword. So it doesn't forget mistakes. Okay, doesn't forget mistake. Having the wrong mindset and using scalping could end up blowing out your account. Simple as that. I know that actually there are people that they don't admit that they are not disciplined, and they find it out in a bad way, unfortunately. And this some of the attitudes that we are finding and we are facing over the years. I'm better than others, I'm learning quickly, I can beat the market. No, markets always win, guys. If you accept that, you will benefit. So this kind of attitude doesn't help, for sure, doesn't help. And the 60 years in financial markets have proved that, actually. So whatever strategy you have tested and it keeps you calm, and you've seen that you're not like lead you to change it the very last minute, or to shift elsewhere the stop loss, or it doesn't turn you greedy, etc. Find something that it keeps you calm, and not only calm, that you identify that you don't like try to change the target levels, the stop loss levels, just to that you haven't spotted yourself to get greedy or something, and stick to that. Be patient, and slowly, month after month, year after year, depends from the personality. I mean, few people need more time to train their emotions than others. It's not definitely not something easy. As soon as you've spotted that you have managed to control yourself, you can try scalping later on. Why not? So, is there a difference between 100 bar simple moving average and 100 period simple moving average? No, I don't get that. I don't get that. Bar, have you seen? Okay, I'm not usually using the word bar, but if you have spotted it anywhere, let me know. I'm very curious to find out. But no, period, I've never seen it as a bar. Let me just double check something. No, period, we're referring to the time frame. If we're in a 4-hour time frame, period means the very last 100 4-hour candles. If it's a day, we're referring to the last 100 days, so on and so forth. I haven't seen anyone stating it as a bar, but not wrong with that. Nothing wrong with that. So let's move on. Yeah, so the worst thing to do, guys, in general, not only in scalping, but this time scalping, it will end up badly, is to trade blindly, right? Something that we keep saying. I think I repeat it every single time that I'm doing a live analysis. Trade what you think, sorry, oh my God, trade what you see, what you actually see, not what you think, or what someone taught you in a forum, or what your friend taught you. No, trade what you see with your own eyes. We are MT4 or MT5. Don't trade blindly. Trying to pick tops or bottoms in a strong trend like this one, or buying breakouts in a range, sorry, this is one way to do it. However, as you can see over here, okay, trying to so this is by the way, just okay, it's a very old example, 2005 2008. It's a euro dollar, it doesn't matter what it is, but it's just a euro dollar. So as you can see in this chart, trying to pick tops in this pair will have led to more than 3 years of frustrating and unsuccessful trading. Okay, so for trending environments, so for an environment that we can see clear trends, traders, you guys, will find a higher success rate by moving along with the trend. Don't go against the trend. Higher success if you're in a trending environment can be found by buying by buying in this case because it's an uptrend. So following the trend. Some people struggling to spot when they should buy. There's a clear uptrend, shouldn't matter, but it's better if you have spotted a short-lived retracement in an uptrend. Then that's the most appropriate entry level. In a downtrend now, any rallies, okay, selling on any rallies is a nice entry point for a downtrend, but don't fight the trend, never fight the trend. So picking tops and bottoms should be a strategy that is used only in a clear range trading environment, okay? So if we don't have a clear trend, but we are seeing a sideways movement, so the asset bouncing around the same bottom and reversing around the same top, I don't have an example over here, the approach in a range trading environment is to pick the tops and the bottoms, so to sell on the tops and buy on the bottoms, okay? One more thing, obviously trading without preparation will end up badly, right? Failing to prepare is like preparing to fail. Simple as that. I mentioned in my last week's webinar, you know from whom. So it's all. It's stating exactly. It's clear. Failing to prepare in everything in life precisely is like preparing to fail. Simple as that. Put down, Mario, your exit strategy. Write it down. Test it again and again and again. And if you feel ready, set it. Predetermine it in order to avoid keeping the trade open and with this way to let your losing entries grow bigger. So write it down. Write your entry and exit strategies down. Okay, that will make you understand how you can improve them as well. Okay, for scalpers, okay, other than, okay, one obviously, my previous slide, one key thing obviously is spotting. That's why I have put this on. Spotting whether you are in a trading environment or a ranging environment, okay? Second thing, having a plan. Guys, it might not be a great plan. It might not be a great strategy, okay? Write it down is the only way to spot what's wrong with it and improve it and to adjust it, amend it a bit until you find the desirable one. But write it down. It always helps. Write down your system. Write down your plan. What time you took each entry, what time you exited, when did you exit and why, how many pips, everything. This will help you spotting what's wrong with it, what you're doing wrong. With this way, you will not repeat your mistakes and you will find there a solution. Write them down, write them down, and write down especially your strategy, okay? Because it will help you to stick on it and not amend it and shift it, the stop loss elsewhere or your target elsewhere to gain more and etc. Stick to it. That's the second part. Third part, actually, it's a part of we're still on the trading plan concept. Trading without preparation. What's wrong with it? What's wrong with it? Basically, it's definitely something that will will turn against you at some point. You might be lucky in the beginning, but at some point it will turn against you. And I'm not referring only to write down your strategies, your setup, what indicators you are using, when are you taking an entry level, when are you taking an exit, when you're exiting the market, etc. It's not only that. Preparation is not only that. Preparation is awake. For example, I wake at 6:30 in the morning, okay? I wake up at 6:30 in the morning. My very first thing is to see what happened overnight. While okay, until I'm ready, I'm using my phone just to catch up with any news, because you know, back of Japan is overnight. US, for me at least, US closed in midnight, so I cannot. I don't follow. Haven't seen all the news the previous night, so I try to catch up myself with what happened overnight. Then I switch on my PC as soon as I'm ready and check where we are standing in the markets, what's my charts, where my favorite assets are right now. So what change? This is a routine, right? But this is a plan as well. I mean, it's not only about write down everything. It's about also following your daily routine in order to bring yourself up to date with anything that's going on around and anything that might have changed. Okay, so you need to sit down at the PC at least an hour before. Make sure your connection is okay, the PC is okay, your trading software works perfectly. Get yourself up to date with the news. Open your charts and see the overall picture of all, first of all, and then going down to the rest of the time frames to see to study them. Okay, because before taking any entry, even in scalping that we are referring to quick small trades, you need to be able to understand what has happened before taking an entry, okay, and what might impact your asset within the day. So monitor any upcoming events and when they're gonna take place, because during the announcement, etc., during the announcement of a policy or etc., you might decide to close all your positions just to make sure that the market noise won't affect you or kick you out. Unless if you have tested your strategy and you'll find out that this it has been created for this market noise, for such a market noise that can be caused by events and trading, and you have track records that proves that it works just fine even and during macro announcement. But if you haven't done that, if you haven't checked and monitored that indeed it works just fine during announcements, better to avoid news releases, especially if you are scalpers, because it might easily kick your stop loss. Understanding on how important the right working environment is. So okay, that's basically based on each one of your personality. Okay, put some examples on. It doesn't not necessarily, there is not necessarily a right one or a wrong one. It depends on you. Okay, for example, I cannot think properly if there is a lot of chatting in the room. Or if the TV is on. So sometimes I find myself wearing headsets without having something. I mean, just I cannot hear anything. I just put them on because I realize that they give me, they help me being focused. Just some examples. that could on how the environment could affect you. So yeah, if you're not in a quiet room or something, you might be easily disrupted, but that's solely on you. Okay, you need a clear mind. Whatever helps you to have a clear mind. So another part of trading without preparation is also the lack of learning. Not necessarily with the webinars. I mean, okay, there are traders that they don't even bother, not only coming to the webinars to learn, but not even studying the financial markets, and they just have the attitude, oh, easy busy, I will just go against the trend, or if it goes up, I will go down. I mean, people that they don't consider learning with one way or another and keep themselves up to date with the markets. I mean, trying to study, not precisely via webinar, it might be a book regarding Forex, regarding online trading. There are dozens over there. Actually, there are hundreds, thousands of out there. Or via videos, webinars, seminars, whatever. But people that they don't bother trying to learn, trying to study, their time in online trading is limited because they don't have the right attitude at all. That's certain. That's certain. If they have this kind of attitude, they will gonna fail. Learn also. We need to understand the importance of practice, not only learning but practice. So only by applying the gained knowledge we can learn to trust it, find our weaknesses and strengths, and learn more. It's the only way to improve ourselves. So practice, 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 practice. Yeah, I have seen this. That's why I've put this quote on, because I've seen it many times. Scalping is easy. I'm gonna get in, and as soon as it's plus, I'm gonna get out. Easy busy. I've seen these attitudes 100 times. It's wrong. Okay, it's absolutely wrong. Because it suggests that there is no plan, there is no entry strategy, there is no exit strategy. So at some point, it's gonna fail and gonna fail badly, ending with a blow account, obviously, because it's quite the opposite. Scalping, because it's so quick, it is highly engaging and demanding. It's not like, I'm gonna enter and as soon as it's a plus, I'm gonna get out. No, it's not. It might be the most difficult, in my humble opinion, strategies. Okay, might be the most difficult strategies, and we can see that from a lot of common mistakes that I have seen over the years. And by the way, why this is completely wrong, this attitude, is because the numbers we have seen, actually, this is true, this is fundamental. I've seen that the number of false signals is greater than the information flow can be much more demanding to handle due to the speed of its emergency. Okay, so it's not that simple. And that's why scalping requires a strategy, not just jump in and once it's a positive, get out. No, it's not simple as that. Come on. I didn't mention the mistakes. Obviously, one mistake is these attitudes that I mentioned earlier. Okay, the attitude of, oh, it's easy. I don't need a plan. I don't need a strategy. I'm gonna just jump in without developing an appropriate trading plan. without keeping a trading journal, without tracking your trades, without identifying patterns, without learning from successes and failures, without trying to get discipline. All these provides you helps you to be disciplined, sticking to a plan, helps you avoiding actually impulsive decisions and manage your emotions effectively. So it is a very common mistake that we have seen, especially from newbies. Another common mistake is overtrading. Okay. Scalping is a very difficult, in my humble opinion, strategy. Exactly because it's very demanding. It can be highly rewarding, of course, but it's because it's a highly demanding one. So it's important to be aware of common pitfalls that can hinder success. And one of them is overtrading. It's the most common mistakes, unfortunately. Sorry. I love action. I trade 150 trades per day. Oh my God, I cannot handle 150 trades per day. Okay. Such an excessive amount of trades can easily lead to poor decision making, unfortunately. And it's not only that, it can also increase the transaction costs. Okay. So failing to manage risk, actually this is the very next one, never mind. Okay. Yes, so overtrading is indeed, you will make you will open more trades, and that might mean more profits, but it could also mean that it might also mean that you will not be able to handle them. Also, it also means that you will have higher costs, higher fees will be charged in your account because you have unnecessary open too much trades, and this will increase your costs. Sorry. It requires more energy, of course, so you might not be as productive as before. You might easily lose your focus due to the lack of energy, the ability to concentrate, or the ability to try and check everything because you open so many trades. It could lead to, you can easily lead you to mistakes, to errors, to closing a position earlier than you should, and not taking a trade when you should, because you have opened so many, you are over trading, you cannot control it. Okay. And it could also affect your emotions as well. I mean, your psychological from a psychological perspective, it could increase so much your anxiety and your stress that you will need a lot of time to recover after such a very demanding day. Okay. So the truth is that 5 to 10 trades a day is well enough, even for a scalper. Okay, it's more than enough. Okay, you know better if one of you knows better himself, but there is a quote. I don't remember exactly but the meaning is that if you're trying to handle a lot of stuff at the same time, you're gonna cheat some of them. I don't know. It's a very well known quote, but I cannot really remember it properly. Also, when it's the time to try and find out what you should trade today, okay? Check the liquidity and the volatility for each asset, okay? Obviously, it goes without saying that you need to understand this concept. You need to understand what is a liquidity, what is a volatility, and how they could affect what is a spread as well, because spread can hurt you. It's a double sword as well. You need to be expert. You need to fully comprehend what is liquidity, what's the volatility, the pros and cons of this trading style, and what is a spread. Okay, by spread we mean the difference between the buying price and the selling price. Why is important? Because spread depends on the broker's competitive pricing and underlying liquidity and volatility dynamics of any currency pairs. So if a particular currency pair, guys, has a very, very, very high spread, okay, that means that a higher spread means a higher risk, okay, higher risk. So when scalping, always go for the lower spread pairs, okay? Because it's scalping is a high trade volume strategy and a low pip margin strategy as well. So spread can hit your long-term returns when compared to a low volume and high margin trading. What else? I would like to give you an example in regards to spread, to be honest. So also, actually, I would like to point at this level that, as I said, try to find low spread pairs for scalping. I've noticed many times that in stock market, scalpers are focusing on highly liquid stocks because they have tight spreads. Okay, so in general, scalping spreads, actually assets that have tight spread are ideal for scalping. Either that's a stock, liquid stock, either that's a currency pair, a future, and etc. Because of the liquidity, tight spreads, okay, tight spread means that their liquidity levels will be ideal for a scalper. So, for example, futures markets attract scalpers because of their liquidity, because they allow them for quick profit taking on short-term price fluctuations. Okay. So it is important to understand the dynamics and factors that influence each market, especially the spread, the liquidity. Okay. It's very, very, very important to understand these basics. Spreads in scalping is important. The tighter the spread, the better. The lower the spread, the better. Because it's the ideal of scalping. In scalping, we want profit on small price changes, right? So tight spread, okay? It's better. Tight spread pairs. It's ideal for scalping. Scalpers is looking for such. those I would like to add in that at that point. Yeah, let's move on actually. Yeah, highly liquid pairs tend to follow the laws of ranging and trading markets better. Recommended due to the historical to their price changes actually. So recommended pairs that are widely used for scalping at the majors, to be honest. So euro dollar, dollar yen, pound dollar, euro dollar, not pound yen. Why? Pound yen is the most volatile currency pair in the world. Very changes very quickly. Okay, so it's not ideal for scalping. Okay, in general, as I said, check the volatility and the spread, sorry, and the lower the better. It goes without saying that you must have a risk management strategy in order to minimize your losses. So having an exit strategy, it's a risk management strategy. But also, you need to, as we keep saying, having determine in advance your risk and reward ratio, how many trades you want to open per day and stick to it. If it's 10, stick to that. If it's 12, stick to that. You shouldn't. You should set some rules for yourself, okay, and stick to them. Not only the risk and reward ratio, but also how many trades you should open per day, how much money you should risk per day. So you might say, I'm okay risking only $100 a day. You should stick to that. You shouldn't risk more than 100 a day. If you use $100 a day, go home then. Stop for the day, come the next day, it's a new day, more relaxed, and start again. So you should predetermine the number of trades, the number, how much money you want to risk per day, and also your risk and reward reward ratio per week, per day, per month, and stick to that. You might say, okay, I would like to, at the end of each week, to have at least 20% profit. Okay, so put that down, make the appropriate risk and reward ratio, etc., how many trades, and etc., and stick to that. Put some goals and don't, in order to let you, actually this will help you not over trading. Okay, if the week has ended but you didn't manage to reach that goal, okay, it's okay, leave it as it is. Next week you're gonna do better. What matters is at the end of each month, at the end of each week, let's say, to be in a plus. No attention to details, another huge mistake. I'm just trading and then check the results at the end of the day. So. Attention to details is important. That's why I said track everything. Keep records. This is how the big boys work. Hedge funds, institutional players, fund managers as well. And that's why they succeed. They keep records on how over the months, over the weeks, how the returns, whether the returns grow or not. They keep an equity curve, okay? They record their actions, everything that they put down their actions, how these actions impacted their account, okay? What the risk and reward mean. So placing a risk and reward ratio 1 to 3, what will mean in the near future? How it could, what will mean for my growth prospects? Okay. If you don't have any limits, if you haven't predetermined an allowed daily loss or weekly loss, if you haven't predetermined the maximum profit targets, if you haven't predetermined how much you are willing to risk every day, then the likelihood of this is actually not a plan, and this could backfire at some point. So if the trader has no maximum allowed daily loss in his plan, the likelihood is that the long-term result will be less than the trader is capable of achieving. Okay. Reach too much money per trade. What's wrong with a leverage of 200? I'm not interested in peanuts. I'm in this for real money. Oh my God, how many times I've seen that. I'm in this for real money. That's a waste of time. And I will go with a leverage 1, 2, I don't know, 2000 or something. It's okay. If you would like to have a huge, you want to increase your leverage, but everything should be balanced, guys. Everything with I mean, in everything like should be in a balance. Such a high number of trades in a demanding working environment, such as the scalping, which requires to be very, very careful. Having such a very, very big leverage could be very, very, very difficult. So it's okay at some currencies, at some point you might want to use the maximum leverage, but if you have an appropriate and a strong and a very, very good exit trade, that would be just fine. But make sure that your exit strategy and your journal, your plan could limit your losses, especially if you are willing to have to set your leverage quite high. You need a very, very strong exit strategy, sometimes with a pretty tight stop loss, in order to trade with a pretty high leverage. And a high leverage, I'm not referring to the 1 to 200 like they here, 1 to 1,000, 1 to 2,000. I have seen this. So if you want to try this kind of leverage, be careful. Okay, be careful. Make sure that your exit strategy, actually do the months in advance. Write down if it comes against you, how much you will lose in case it kicks your stop loss, in order to decide whether you are willing to trade with a leverage up to 100, 1,000 or 2,000, etc. Do the months in advance, just to make sure that in any case that something went awfully wrong and it comes against you, how much you will lose. Now there are online calculators, setting the leverage, putting your position, entry level, exit level, etc. You do the math for you automatically. I think there is an online calculator as well if you download AutoChartis. So yeah, if you have AutoChartis in your MT4 or MT5, there is a calculator. I don't have it over here, but there is a calculator in which it will help you, but there are a lot of online ones as well. Okay. I'm gonna skip a bit. I'm gonna quickly turn to very quickly present the pros and cons of this trading style. So the pros of following a scalping is the fact that it magnifies gains with leverage, and also is how fast it is. Open and close positions very quickly. You don't need to waste a lot of time. You cannot trade on hundreds of forex pairs, and reduces the losses as well by holding position for a short time. But there are some disadvantages that you need to have in mind, such as it magnify also losses with leverage, especially if you have set your leverage very high. One large loss could wipe out all your small wins. That's why you need to have identify and put in place a nice strong exit strategy. Also, risk your money on a highly volatile market. So that's why low spread currency pairs are ideal for scalping. Gain profit slowly due to small incremental wins. So because it requires, the idea is small profits, it will take, that means small profits, slowly, small incremental wins. So it's not like having a single entry and having large gains, but having many small ones. So that's pretty much it, guys. This is the rules are. It's more of a theoretical webinar, basically. I should have to warn you. It's more about highlighting what common mistakes we are seeing from scalpers. So it was more of a theoretical, I'm afraid, webinar. Just to alert what you should be careful about. So I know that it was a bit boring, but these are important as well. The rules, especially in scalping, are very important. Some of them might be obvious, but unfortunately, people not follow them. They don't consider them important, but there might be the basics, the basic mistake and the most common mistakes that explain a lot of wrong practices that end up with losing more than gaining. So that was the webinar of the day. Very theoretical. Understand that these kind of webinars are a bit boring, but we should present these kind of webinars as well, just to alert and help people that they're facing a lot of emotional controls. If you have any questions, just stick in the question box. I am here to help. If you're already scalpers and you're not sure, even after this webinar, what you're doing wrong, just send us your system via email, and me and my colleagues will try to spot what's wrong, why that entry went badly, and etc., and try to help you improve your system. Yeah, feel free. So that was the end of the webinar. If there are no further questions, I'm going to call it a day. Thank you very much for attending. Have a great day ahead. As I mentioned in the beginning of this webinar, it's the very last week of March. Okay, so it's the end of the quarter as well. So a lot of profit-taking condition will be seen, especially as we go towards Friday, okay, in the PCE data. So be careful for some pullbacks over there in stocks, in indices, in dollar, okay. Yen is in the spotlight as well. Gold as well. Geopolitics as well, I'm afraid. So yeah, Thank you very much. Have a great day ahead and see you again tomorrow with another webinar from my colleague Michalis this time. Thank you. Take care. Bye-bye.